What is going on, family? Welcome back to the channel. Hope you are doing well in this lovely day, Thursday, 15th of January. Lots to get through. So there are major catalysts in the market, both for and against prices moving either direction. But I'm here to keep you calm and go through the noise. Of course, biggest domination right now in the last 24 hours, or what I'd like to call big money wants to push you in a certain direction, is the trade that's elevated because the Clarityact is nearing, of course, with bulls positioning for fresh all-time highs. These headlines are misleading. Okay, Bitcoin is consolidating strongly. Yes, momentum cools and focus shifts on regulation. Bitwise signaling Clarityact could determine whether the price, market breaks all-time high or not. Of course, it is a big deal, but it's not everything. So I'm going to get through some key macroeconomic things that can have an impact on Bitcoin. So let's start here. Trump has been assured that Iran has stopped killing protesters. In my opinion, this is way too simplistic. And this could be a potential short-term black swan for the markets, because this is a wounded regime. And the last time, Trump did this, he struck over the weekend. If you remember, he sent his negotiating team over to Qatar to meet the Iranians, gave them reassurances the week before, and then bam. Over the last 24 hours, a lot of US and, of course, United Kingdom Air Force assets have been moved out of the Gulf. And that's a fact. So will I trust this headline? No. Could there be a possibility, while everyone's looking at this Clarityact and where the price of Bitcoin is today, to set another major trap? I think this is something that you need to be 100% aware of. There's been a lot of, military hardware that's been moving in, and then families moving out. So you never know. I don't trust anyone when it comes to military action. So watch that space. And of course, a wounded regime, that is a desperate regime, could be sending things all kinds of directions if obviously they are on their last leg. Okay, Supreme Court ruling on tariffs, that is no longer going to be, that can has been kicked down the road, so you don't have to worry about this. Okay, and it isn't just about refunds. Volume of US freight trade could hinge. Of course, we've got a big seasonal event coming up on holidays, and this is going to be in February. I think now they will send this back to late January. Okay, now in case, of course, the longer the Trump Supreme tariff delay decision, the better it is for the president. And this is my opinion. I think this is a note, something to keep an eye on, because he does have access to his 25%. And he's already been hitting anybody who trades with Iran with this trade tariff. So this is, for now, it's going to be super bullish. If the Supreme Court rules against him, I think the markets will melt up. So this one is going to be, for me, 100% bullish, right? We hate his tariffs. Tariffs have done terrible for us, and the markets want clarity, and I think this one will be a massive pump when it comes. Markets already pricing in to a certain extent, but I think this will be a major mover. Okay, so the fact that obviously this whole idea now, there is, this has been talked about at academic levels due to the beef between Trump and Powell, and don't expect this to go away just like that. At the end of the day, they need to present their case, whatever. And this is kind of the biggest separation of power controversy since the steel seizure case in 1952. So make no mistake about it. Whatever that's going to happen with the Trump Powell situation, the sooner Powell leaves, the better here. But expect this to make some kind of headline, and it'd be interesting. I don't expect any rate cuts because of the inflation that we've just had. We've had good data. They could cut, but I don't think they will. Okay. So this is the headline: elevated trade, Clarityact. And we're going to talk about the Clarityact now. Of course, Ripple, the Senate, There's a lot to unravel behind closed doors. And major sticking point here is US banks pulled the Clarityact, an extinction level event, and they want to protect their $360 billion revenue. And I think that's where a lot of people are drawing the kind of, do or die for crypto. But that's not true, right? They will find a compromise and it will be passed. And when it's passed, there will be a massive, massive advantage. Of course, here people are talking about XRP, of course, BTC, and something else that they don't really mention, Solana potentially. So there's a lot of cashing in onto the retail emotions, but I'm here to keep you calm. For one, nobody's ever gone through this document in detail, especially within the crypto bros, right? So there are things that we need to take away, such as maturity blockchain and the evaluation process that has to be enforced for a blockchain to be mature. Now, I have already done some really decent work on this with this infographic. I'll probably drop this in the Discord at some point, but there is a video on the channel that explains what a divided market is and how what's the playbook, right? We need a playbook for this. So what is it? So I came up with this piece of infographic to make it as simple as possible. New legislative frameworks, specifically both the Genius Act and the Clarityact Act, are going to be fundamentally redefining digital assets investments by shifting focus from speculative to structured regulatory maturity pathway, right? That's going to be very key. First of all, let's see what the have a look at this. This is a guy from Coinbase.
This week, we got a full look at proposed market structure legislation ahead of its markup tomorrow when the Senate Banking Committee released the full text of the bill on Monday night. Now, I want to start off by pointing to a portion of the bill which prohibits stablecoin issuers from offering rewards simply for holding stablecoins. Instead, according to the proposed legislation, those rewards have to be offered through the completion of a transaction or something like a rewards program. And that is a win for the banking industry, which urged Congress to close what they deemed a loophole in the Genius Act that allowed intermediaries to pay interest on stablecoins. Banks argue that this would lead to a flight of deposits from the insured banking system, potentially threatening financial stability. And crypto companies, especially Coinbase, have been fighting back against that claim. In fact, a few months ago, Coinbase launched a six-figure marketing campaign targeting concerns from banks over stablecoin rewards. So what do you think about this development tied to stablecoin rewards?
The Genius Act was really a historic piece of legislation, and what it did was allow the United States to be on the cutting edge of moving payments to blockchain-based financial rails. And why is that important? Because it essentially de-risks payments, and it takes about the $200 billion that we now pay for payment processing and wrenches most of that cost out of the system. And that's good for consumers, it's good for economic growth, it's good for economic efficiency. So we understand that the bank lobby is very good at persuading members of Congress to protect its incumbency, but our focus is very much on protecting the interests of consumers, and that means making sure there are as few frictions as possible on the...
No one is protecting consumers, but obviously everyone's going to grease up. We'd rather grease up the crypto side. And in my opinion, without making it too complicated, so divided market, so regulated versus unregulated, new crypto, nothing's going to change. If the bill is kicked down like Charles Hoskinson said, if it's 2028 or 2029, then it's going to be okay. Yeah, there is just a more casino, right? At the end of the day, we've existed in this space, so nobody should be pitching this as a make or break for crypto. And the only reason why they are being super hyperbolic by either directions is because of the fact that they need to have new set of people to trap, right? So crypto has to make money. Oh, it's the start of the new bull market today. Yes, I am here, and I've been here in the dark days. Been here, from the October days or the April days or 2022 or the bottom of the bear market in 2023. Doesn't really make any difference. It's all a distraction. What you need to know is certain cryptocurrencies need to meet a certain criteria to become commodities. there's going to be positive legal requirement or actually approval for projects to raise $73 million in the United States without needing to register with the SEC. That's in the bill, right? Stablecoin integration and payments. So this is going to be another thing that is, the banks are fighting. Staking activities and DeFi protocols are governed, right? Non-compliant cryptocurrencies will still be able to be traded. It's just that they will have limited access to this 80% institutional, right? Institutional flows based on the commodities and the compliance. And so far, the compliant cryptocurrencies are very, very few. Okay. I hope you're liking this video because you can't get more clearer than this, right? So there's these things that they need to become kind of a couple of criterias, tokenomics. Of course, they need to meet their maturity roadmap to have a first mover advantage, which is critical. First blockchains to achieve mature status will gain significant competitive edge. What does that really mean? It just gives the teams a lot more in terms of what they can raise, but it also gives them an additional, additional clarity here in case of, what we've seen previously. So token distribution, 20%. Ownership must fall below 20% for certification. Governance, there must not be a single entity that controls or has unilateral control. And of course, foundational plans. There must be a clear timeline for community governance handover. So these are just some of the things. Crypto will not stop, right? It's just about this institutional capital and a divided market where, of course, projects are fighting to become more regulated. Now, in terms of individual stablecoins, DeFi protocols, including the UI provisions and validations, those are protected from registration requirements. It allows proof of stake, yields, Ethereum staking, and all of that to complete directly with regulated stablecoin yields by providing legitimate yield-bearing assets for investors. Okay. Previously, this area had legal uncertainty. So, the evolution of due diligence is great for investors, right? What's not so great now is the lack of clarity into how they are going to spin this whole thing. Overall, the Clarityact is a major milestone for the evolution of our industry. There's nothing to be scared about. This two-tier system, if they are really going to govern cryptocurrency in a positive manner, I do believe that tokenomics, governance, and foundations should be the heart of it. Where the real threat comes from is the banks, and that's going to be out of our hands. You and I cannot influence what goes on there. Okay, so while we focus on the Clarityact, the Scott Reform Bill suggests ongoing legislative efforts to refine the ethics of the broader market. And this is why we have such a big divide with banks literally just going against this because it's not in their best interest. Okay. So David Sachs, this was back in December, of course, said that we are close, but any failure by Sachs to get this past the Senate would be seen as a haven for market makers to try and then use this as an event for liquidation. I hope you liked the video. I'll catch you on the next one.